Hi, fellow traders. I hope you guys had a great week. Now, my week was subpar, but a lot of it was my own doing. It was just me implementing my strategy on the market, and I'm only making subtle changes from week to week. And that's the only way to make sure you're not taking something away from you, that's working. Because becoming a consistently profitable trader, which is our first goal, it's not going to happen tomorrow. It's not going to happen next week. It happens with time. And like I said, you before you give me 6 months, I can get you there. But it's an ongoing process that requires like trial and error with inside you. You have to trade these strategies and put them into play and feel the feelings that you're going to get while you're in the trade. Then I can't really give you those feelings. And I can give you strategies on how to work through those emotions and all of that stuff, but you experiencing them is going to be on you. Because we're always striving to be perfect. Now, we can't be a perfect trader. There's no perfect traders out there, but we have to try and perfect our execution. Now, the market's imperfect. It's not going to do what we want it to do all the time. But if we build a trading plan, we can execute it perfectly, or we can strive to execute it perfectly. We'll never be perfect, but get as close to perfect, as we can. We're always looking to cut our losses, minimize our losses, and maximize the potential that we have in our trades. That's the end goal. So that's where your reflection process comes in. That's where putting in that work, looking at what's right, what works, what doesn't. And so I'm gradually moving toward the comfortable part, and I'll only be there for a couple of months, because then the market's gonna probably switch back. But I know this is what I do every year. It's nothing new. It's not out of the ordinary. It's just that I'm having to do it earlier this year than I have done it in the past. But that's just the market. That's what we're dealing with. So when you stop chasing the wrong things, you give the right things a chance to catch you. And you guys that are chasing these pipe dreams, you're chasing the wrong thing. I know, because I was doing it. That was me when I started. And until I stopped and I realized, hey, I need to find somebody I can work with that's going to be closer to what I'm doing. Trading closer to the same size. Managing their risk closer to the way I need to manage my risk. Because the worst thing I could have done is sitting there with the $1,500 account, following somebody, trading with over 100 grand or over 200 grand supposedly in their account, and trading this mega size. We can't do that. If you're trying to learn from that, you'll never get anywhere other than to lose all your money, because it just doesn't, what you're learning is not relatable. But all of these strategies, the strategies that I trade, that I take 300 to 500 shares on, you could easily take 3,000 to 5,000 shares. These stocks have that type of liquidity. It has, and it's consistent. It's not something that's going to happen today and not happen tomorrow. These stocks trade with a lot of volume. And you'll be able to tell at that time, can you trade a lot of volume on this stock? Or do I have to scale it down a bit? But whatever the case, you're going to decide that through the course of your trading. But the main thing is, you got to stop chasing the wrong things. Let the right stuff catch up with you. You let me catch up with you, I can help you get you to where you want to go. That's what I do every day. So, you know how I said nobody could go back and start a new beginning, but anybody can start from today and create a new ending. That can happen, but you got to stop chasing the wrong things. You got to eliminate those things that are detrimental to you achieving your goals. All right, so let's take a look at today real quick. We'll cover today, and then we'll look at yesterday. Now, I had to download yesterday's into TraderView. I didn't get home till like 3 o'clock this morning. So some of you guys who got emails from me at 3 and 4 o'clock this morning, that was when I got home. Was a long day at the hospital, just waiting to see what was going to happen and all of that. So you guys in chat, you knew when I had to bail out. It wasn't long after I ended the live stream. I did 2 mentor sessions, and right in the middle of toward the end of the last mentor session, that's when I got the call and I had to get up and go. So we're always on alert with my brother. He's got a bad heart, and we're always on alert with him. So, but everything worked out. Just a long, long, long night. And I was surprised that I was as focused today as I was. So this morning we had a lot of stocks. I think I had 6 or 7 that I put down on my watch list. And it's really, really difficult when you have that many good stocks that have potential. And you have to try and pick the 1 or 2 that you can focus on. You can't watch 6 stocks at one time and try to catch the opening range breakout. It's really difficult to do that. So, I always have to kind of focus on one stock, kind of lock it in, and trade it out. And today, INTC was the one that I locked in on. And yeah, a lot of the other ones on my watch list made bigger moves, but I think this one was the smoothest. And it unfortunately it didn't break down anymore and get to 51 like I wanted it to, but I got the meat of the move, and I'm very happy with ending the day with this stock. Now, as usual, the first hit was a stop out. Caught the opening range breakdown, got stopped out. We're still within 10 o'clock, so opening range is still in play. I got in on the break again of this opening range low and had to hold through some bouncing because it just wasn't ready to go. And then finally it broke loose. There's a level here around 52.17, right above where red to green was, so I took some profit there. Next was down here through 51. I think I got it at 51.75. I was gonna do 51.50, but I said no, 75 may be more logical because of the way this stock was moving. But 51.50 was gonna be my second target. And as you see, I made the right choice based on the price action to put my profit target at 51.75, because even though it came down here, it never hit 51.50. I think the low here was 51.55, and even on this sell-off going into the close, we never hit 51.50. So just the trade worked pretty good. There was nothing else that I was really interested in trading. I was watching Facebook, but it bounced and it kept bouncing, and I wasn't going to buy it long through all of the resistance it was trading through. So I just stuck to this and waited to see if we were going to sell off. But 212.03, I managed my loss here, and I felt that was the best thing to do. Yeah, I could have let it run up here. It would have been well within my risk, but I had no idea whether this was going to rip or what. You can't sit there and think at that point. My technical stop was if we claim this level again and we closed above it, this candle opened. As soon as we broke the high of this candle, technically this trade was dead. I had to wait for it again. And it set up again, fortunately, and we took it off. Now here, this one closed back above, but this candle never broke the high of this candle. So because of that, I felt pretty good about it, and it just kept on coming. But textbook opening range, breakout, breakdown trades, they may not work the first time. Like I said, these hedge fund guys, these guys that have big money, they're trading against us. So they know a lot of day traders use the opening range, whether 3 or 5 or whatever, and they'll bounce it. But I don't think that was the case. I think it ran into a lot of support on this red to green line, and a lot of people bought it off of this. This becomes a buying event here, and a lot of people bought it off over there. And once we got rid of these buyers, and it just started to come back. So, and we'll look at this on a couple of stocks from yesterday, and you'll see it kind of did the same thing. So really happy with this today. 212.03, not a bad way to end the week. So we also did all week long, we've been doing the all-day holds. Now the all-day hold is a little bit more advanced. It's more intermediate type strategy because you need a little bit bigger account. You need to be able to give a stock a little bit more room because you're setting it and you're forgetting it. You're letting it run all day. Now, this is the precursor to swing trading. At least for me, that's what it was. I went to all-day holds first, and then once I was comfortable holding a stock all day without watching it tick for tick, I was able to get into swing trading. Because the worst thing you could do swing trading is get in a swing trade and watch it all day long. And that's why a lot of times I just hate posting my swing trades, because I get DMs all day saying this stock is doing this or this stock is doing that. And I have to tell them, I don't care. I'm in a swing trade. I've got my stop set, my profit target set, and I'm just letting it go. I look at it at lunch to kind of assess where we're going. And then I look at it right before the close. And that's what I did on Tesla. I looked at this thing at lunch, and I was like, oh shit, this thing is bouncing. And I saw it hit here, and we started to come back. And I was like, well, I'm going to put my stop just above the 50 here, which should give me, at least a point if we start to go away. So I'll take a point for my trouble and go on. And that's pretty much what I did here. It ended up bouncing off VWAP and took me out. But I wasn't going to sit here and watch this. If it took me out, fine. If we roll back over and came back, that'd be excellent. My target today was 222. And it did not get down there. It just didn't make it. It hit this 225 and kind of came down here twice around 225, and it did not break through that floor. And so really disappointing today. Yesterday was killer, and we'll cover all of the all-day holds from this week on Sunday when we talk about the swing trades, because this is a precursor to swing trading. So I'm going to kind of group this in with the swing trades, because that's how you're going to have to manage them. But just wanted to kind of show you this today. This was a good example of what happens when it fails and how you need to kind of react to it. So that was that. And then we'll talk about DIS, and then J&J is the one that we took that we got in yesterday. It's working okay. Not making the move that we want to see, but today was just a crazy day. So I'll just chalk that up to Friday, and we'll see what we do coming out of Monday. DIS almost hit my 145.50 target. That's the next target on that. You remember we already took profit, then I added back on the pullback, and now we're looking to take profit around 145.50. But we'll cover all of that in detail on Sunday morning. And if you missed Sunday morning, the video, I'm gotten a lot better about learning how to get the video up quicker. So usually the video is up relatively quick, and the email is out. The newsletter is out pretty quick that morning. So look forward to that on Sunday. And then here, I just had this in here so I could review it tonight. But this is the move yesterday on Tesla, and I wanted to compare it to today, and it practically did the same thing. Today it sold all the way off. I was hoping it would sell through the level today like it did yesterday, but it didn't. But just trying to compare yesterday to today and see maybe what might have prevented it from hitting the target today versus yesterday, but I'll be doing that later. All right, so these, like I said, I got home too late to print it out on DOS and do what I normally do, because after midnight everything resets. But you guys, the good thing is, you guys that were in chat, you guys that were on live stream yesterday, you got to see these happen. So you got to see me get hurt on this, and look at what happened here. I had the right idea. This was the right idea. We knew this was coming back. I knew based on how this looked, I knew this was coming back. And I got stopped out before the main move. There's no way I could hold it through all of this. My mistake is, and maybe it wasn't a mistake, I don't have all of the moving averages and stuff on here, but if you look at that chart, it had to get through all of the moving averages and stuff before I could take it. And had I waited and let it go, look at the move I would have gotten. Absolutely beautiful. But ended up getting stopped out early. You know, these guys, the not so much the market makers, but the other traders, institutional traders and all of that are gonna, they're gonna work their magic, and I just happen to get shaken out. So now this is not right. This is not taking into account one of the fees from SureTrader. For some reason it doesn't pick it up, but this is close. This was just a little over 230 that I lost on this deal. And I was trying to keep it close to 200, but it just slipped away from me a little bit. But I kept it under 300, and that was kind of my goal, is not to lose 300. SAVE, this was another one that it looked really good. Here's the continuation under the low. We had a bounce. I'm catching the continuation under the previous low. I get one cover, and then it bounces, takes me out, and look at what it does the rest of the day. So I'm having the right ideas. I know, or have a really good intuition as to what the stock's going to do based on the technicals and everything. But I'm just getting caught in these big pullbacks. And I have to be in tune, just like I was today. Just stay locked in stop looking around, stay locked in, and catch this on the next one. And then I had 2 points into the close I could have picked up on this. But, again, I got shook out. All of these are the same order. It just got filled on 3 separate tickets. But you can see, same time and everything. So all of this was the same order. And only made about $50 on this. I think it was 52 and some change, after all of the right fees have been taken off. But just did not work for me. Tesla, I thought we were going to reject and come on in. It didn't. It caught a bounce, made a higher low, ended up taking it off. I only took 100 shares of this. I was thinking, at this point, I was like, I'm just going to get this and let's hold it the rest of the day. See if it gets down to 222. That's the frustration in me from the previous 2 trades. But even that didn't work. So, last ditch effort was Facebook. Got in Facebook, caught a piece and it bounced. Ended up stopping out at break even. Got back in on the rejection. Had to hold through a little bounce here. But had a decent enough entry to where I could hold. And ended up locking in some profit here. The problem is I had to leave. Had I been here yesterday, I think I could have ended up with another $200 plus day. There were trades in here that I could have taken. Like here when we made a higher low on this bounce. Could have caught the rejection here again. Now, there were a lot of trades I could have taken. I probably wouldn't have taken a long trade, but I definitely would have jumped on the rejection here. But having to take off early just really messed everything up for yesterday. So I only ended up with 69.17. I only ended up with 69.17 yesterday. And then today, 212.03. So only ended the week 681.02, on roughly half of what I did last week with just 2 days. But on Monday, Tuesday, and Wednesday, I took $300 losses each day on one trade. And that's what I had built myself up to risking $300 per trade. But because the market after the morning session is not really giving us huge moves, when I lose that $300, it puts a big dent into my profits. And when that happens, other problems start to show up, like the high cost of commissions may tend to eat into your profits a little more than you want to. And that's why trading the right way for whatever broker you're in is the right thing to do. But I look at TD Ameritrade, theirs I think is $6.95 commissions. You got Fidelity, I think is $4.95. I mean, SureTrader's commissions are not really out in left field. But when you start taking big size and you start holding overnight, that's when you're going to start running into these big fees. So if you stay away from that, you're going to be fine. And it's going to be a non-event. So you learn how to trade. You do it correctly. Commissions are nothing. Man, in 1999 when I started, I wasn't day trading. I didn't know what the hell I was doing then. I was just trying to trade something in the market. Those commissions would make you cry today. So this is nothing, believe me. This ain't nothing. Y'all know that song, This Ain't Nothing. But last but not least, equity curve is going in the right direction again. Had some hiccups, but we're headed in the right direction. Hopefully I can have another streak like this before we see it go down. Like I said, I am adjusting slowly but surely. This week, I'm reducing how much I'm risking on a trade, which is going to reduce my position size and probably cause me to take 2/3 at the first profit target versus a half. So that's the adjustment that I'm going to be making. It should allow me to make a little bit more profit. Also, I'm still going to look both ways, 3 minute and 5 minute. I'm going to make that decision based on the price action and what I see on the chart at the open. But, that's not going to change. So that's where we are. That's my week. I'm going to wash it off right now and, get revved up and ready to go. I'm reading this book. I'm almost finished reading this book for the third time. That Can't Hurt Me. I'm going to talk a little bit about that Sunday. And I'll share with you the next book I'm going to read next month. But this has been really, really powerful. So we'll talk about that Sunday. We'll talk about the all-day holds and talk about the swing trades that we got now and scan a little bit, see if we can find some more gems out there. So you guys enjoy your weekend. Be safe. And for those of you I see on Sunday, I'll see you on Sunday. The rest of you guys, I will catch you Monday morning.